Today we are going to analyze Terry Smith's US stock portfolio. We will look at all the changes he made in Q2 2025. We will go through the history of all his current investments, and finally we will try to find patterns and strategies that this incredible investor is using to build wealth. And while this video is not sponsored by any company, I am able to make such videos thanks to the support of Patreons of this channel. People that get access to not only the Smart Money Portfolios tool that we will be using throughout this video, but also Stock Ranking Pro, which has all the data about all the companies ever analyzed on this channel, and 4 different valuation calculators. So thank you very much for all your support, and if you would like to join this great community of intelligent, driven and like-minded people, then head over to our Patreon page. The link is in the description. Okay, let's choose Terry Smith from all the investors we have in the Smart Money portfolios. And here is the overview of his portfolio. So it is worth $23 billion. He received $55.5 million in dividends last quarter, and the value change last quarter was $1 billion. He was mainly selling, but the difference is not really meaningful, and there are 39 investments in his portfolio. We can see the history of the entire portfolio here, the history of dividends, and all the positions. Now, let's take a look at 2 companies that he sold last quarter. First one is Equifax Inc., which collects and sells credit informations about people and businesses. So let's go here, Equifax. And we can see he closed this position for $57 million, and he bought his first shares in Q4 2018 for around $93. And he sold his last shares last quarter for around $259. So a very nice investment. And we can see that he was adding to this position, trimming it all the time. But here is a very interesting moment in Q4 2021 when the price reached $292, he sold a meaningful portion, and from that moment he's basically holding the same amount of shares. The price is going up, so he's starting to sell, and last quarter he decided to exit this position. So a very nice investment, and on top of that he was receiving a really decent dividends all the way through. Now, the second company that he exited last quarter was Brown-Forman Corporation, which makes and sells alcoholic drinks like Jack Daniel's whiskey and other spirits. We can see he exited this position for $327 million, and he bought his first shares in Q3 2019 for around $62. Now we can see that he exited this for around $26, so it seems that he lost money on this investment. But we also have to look at the entire history of this investment. So we can see that he was adding to this position a lot until Q4 2021. When the price was at $72, and then he sold some shares, so maybe he made some money here. But all in all, it seems like not a very good investment for Terry Smith. But what is important is that he was receiving really nice dividends every quarter, around $2 million. But in Q4 2021, he received an incredible special dividend and he got over $18 million. So even though he bought those shares for far more than he sold them for, he probably got his money back just through dividends. So now let's go to his current portfolio, and the smallest position in his portfolio is Mastercard, which of course runs a payment network. Okay, so we can see that Mastercard makes up 0.07% of his portfolio. It is valued currently at $15.5 million. Last quarter, he received a small dividend of $21,000, and the value of this position went down by $11.5 million. And the reason for that is that he sold 44.1% of this position last quarter. So we can see that he bought his first shares in Q1 2023 for around $363. And in Q2 2025, the price got closer to $600. Now we can see that he basically was holding shares of this company all the way through the investment, and just in the last 2 quarters, he decided to sell, and right now we can see that he made this investment much smaller, but he made a lot of money during those 2.5 years of holding Mastercard. Now the next position is Napco Security Technologies Incorporated, which makes security systems like alarms and door locks for homes and businesses. Now we can see it here. It makes up 0.12% of his portfolio, valued at $28 million. He received a nice dividend of $133,000, and the value of this investment went up by $28 million. And the reason for that is that it is a brand new investment for Terry Smith. He just bought the shares of this company, so we can't really learn anything from this move. We don't know, will it be a long-term investment or just some idea that he will exit pretty soon. We can treat it as an idea to actually look at this company to see if we like it, if we would like to invest in it. Now, the next company on his portfolio is Home Depot. It makes up 0.13% of the portfolio, valued at $13.5 million. He received $191,000 in dividends last quarter, and the value of this investment went down by almost $11.5 million. Now, the reason for that is that he sold 27.3% of his position. We can see that he bought his first shares in Q1 2021, but he really made this investment big in Q3 2021. He bought his shares for around $328 back then. Now the price is basically very close to that, $366. But as we can see, the price didn't do much. And for the last 2 quarters, he is trimming this position. Now, what is important with Home Depot is the fact that he is receiving nice dividends all the way through. And the next position on Terry Smith's US stock portfolio is Medpace Holdings, and this company helps drug companies test new medicines in clinical trials. It makes up 0.17% of the portfolio, valued at $40 million, no dividends, and there was a small change of the value of this investment, $1.1 million. He didn't make any changes to this position, and it is a fairly new investment. We can see that he bought his first shares in Q4 2024. for around $332. The price at the end of Q2 2025 was pretty similar, and he's just holding this position. So we will have to wait a bit longer to see what will happen with this investment. Next in his portfolio, we see Verisk Analytics, which analyzes data and helps insurance companies and other businesses make decisions. It makes up 0.24% of the portfolio, is valued at $54.8 million. He received $79,000 in dividends last quarter, and the value change for this position is really meaningful. It is minus $43.5 million, and the reason for that is that he sold 46.7% of his investment. And as we can see, the price is going up a lot, and since the price is going up, he is selling. But let's go back in time. He bought his first shares in Q4 2018 for around $109. We can see that when the price was, well, basically stagnant, maybe going up a bit, he was adding to this position. We see a fall in price in those two quarters, Q1 and Q2 2021, when he added a lot to this position. Then the price went up. He came back again to a similar level that before, and then he was just holding the shares until Q1 2024, when the price was around $235. Then he started to sell, and he is still selling a lot of shares while the price is going up. At the end of Q2 2025, it was around $311. So it's going to be interesting to see, will he exit this position altogether? And also, since Q1 2019, he was receiving some dividends. Next up, we have Exponent Incorporated. It is an engineering and scientific consulting company which investigates accidents and solves technical problems. So it makes up 0.24% of his US portfolio. It is valued at $55.7 million. He received a nice dividend of $224,000. And the value went down by $12 million. And the main reason for that is that he sold 10.7% of his investment. Also, we can see that the price went down, but very slightly. He bought his first shares in Q2 2023 for around $90. He was holding this all the time. Then the price jumped a bit to $115. He sold some shares. The price came back down again, and now it is going down. It is going below what he paid for the company in Q2 2023. It is just over $70, $74 at the end of Q2 2025, and he is trimming this position. So either he is preparing to exit this altogether, or he needed just some cash for other investments. Also, through the years, he was receiving some nice dividends. Okay, and the next company is Manhattan Associates, which makes software that helps companies manage their warehouses and shipping. So it makes up 0.25% of his portfolio, valued at almost $57 million, no dividends, and it is a brand new position to his portfolio. So also here we will just have to wait and see what will happen with this investment. Next, we have Catalyst Pharmaceuticals, which develops medicines for rare muscles and nerve diseases. So it makes up 0.26% of the portfolio, valued at $58.7 million. Last quarter, the value of this investment went up by $6.6 million. And the reason for that is that he added 25.9% to this position. And it is also a fairly new investment. He bought his first shares in Q1 2025 for around $24. Then the price went down to $21.70 at the end of Q2 2025. So he is buying some more shares. So we can see that the price is going down, but his conviction of the company, of the fundamentals, is strong, so he's adding to this position. This is a typical value investor's approach, thinking about stocks as part of companies. So we believe that the company is strong, that it's going to grow, that it will make a lot of money in the future. And the price is just something that we can use to make our decisions. If somebody is offering us a nice company at a lower price, we just can buy more of it for less. So the market is here to serve us, not to tell us what to do. And that is what we see from Terry Smith in this case, at least. Next company in his portfolio is Sabre Corporation, which makes software for airlines and hotels to manage bookings and travel. So it makes up 0.3% of his portfolio. The investment is valued at $67.9 million. No dividends last quarter, and the value went up by $7.5 million. What is interesting, he didn't make any changes to this position last quarter. So this value change was all created by the change in price. Now we can see that he invested in this company in Q4 2018 when the price was well over $20, but only when it fell down in Q1 2020 to around $6 or just under $6, he started to make this investment bigger and bigger. And he was adding to it until Q4 2021 when the price was at around $8.59. Since then, he's basically holding this position. He is trimming it sometimes just a little bit, but he's holding it. And we can see that in Q4 2023, there was a special dividend. He got $36 million back through that dividend. So it seems like not a best investment because the price is lower right now, or at least at the end of Q2 2025, it was around $3.16. So he is holding it probably because he doesn't want to take the losses on this investment, and at the same time, maybe he will get another big special dividend. The next company in his portfolio is Clorox, which makes cleaning products like bleach and disinfectants. So it makes up 0.32% of his portfolio, valued at $73.6 million. And he received really nice dividends of $760,000 last quarter. But the value of this investment went down by $16.6 million. And he didn't sell any shares, just we can see that the price fell down quite rapidly. So he bought his first shares in Q4 2023 for around $142. And he was basically holding this position. We can see that when the price fell down a bit to 136, he added to this position. But since then, he is just holding the shares. But in the last quarter, the price fell down all the way to $120. So he is in the red with this investment. Luckily, he is receiving really nice dividends. So it probably helps him to just keep this position and see what will happen. Okay, next position is Verisign, and this company manages .com and .net website addresses on the internet. It makes up 0.34% of his portfolio, valued at just over $78 million. Terry Smith received $208,000 in dividends last quarter from this company, and the value of this investment went down by $66.5 million. Now, the main reason for that is the fact that he sold over half of his position, 52.5%. And the price, as we can see here on the graph, is going up very, very rapidly. So he made some great money on this investment, and he is just taking the gains. So as we can see, he bought his first shares in Q4 2018 for $148. Then the price was basically going nowhere, so he started to add a bit to this investment, and through the years he was using the market, the volatility of the stock to his advantage. We can see that the price was up at around $253. He sold some shares. Then when it went down to $167, he added a bit to this position. And right now he was basically holding it, trimming it a bit along the way. But when the stock went up first to $253 and then at the end of Q2 2025 to $288, he started to sell a lot of shares. And he received some dividends last quarter, but before that, this company was not paying any dividends. Now, the next company in his portfolio is Graco Inc., which is a manufacturer of fluid handling systems and components. So here we have it. It makes up 0.34% of the portfolio, valued at $77.4 million. He received $247,000 in dividends, and the value of this investment went down by $17.7 million. And the reason for that is that he sold 21% of his investment. He bought his first shares in Q1 2023 for around $73. Then he made this investment much bigger next quarter, and basically the price is not going anywhere through the years. And right now, at the end of Q2 2025, he started to really trim this position. Along the way, he was receiving quite nice dividends, but nothing special. So it seems that he is not really happy with this investment. It is not going the way he probably anticipated. He is okay, he's not losing money on it, he is getting some dividends, but nothing special. So it is possible that he will either exit this position altogether or he will make it smaller in the next quarter because he just finds better opportunities to invest his cash. And next company in his portfolio is Rollins Inc., which is a pest control company that owns Orkin and other exterminator brands. It makes up 0.36% of his portfolio, valued at $83.4 million. He received decent dividend, $243,000, and the value of this investment went down by $2.8 million. And the reason for that is that he sold 7.4%. And the price, as we can see, is going up. So it seems that he is one of those investors that really likes to take his gains. When the stock goes up, when he knows that he can make money, he likes to sell at least a part of an investment to lock in the gains. He bought his first shares in Q1 2021 for around $34. We can see that he was adding and selling a bit while the price was doing basically nothing. And through the years, we can see that since Q4 2023, the price really started to go up. And now that he's close to doubling his money, he's starting to sell. All the way, he was also receiving some nice dividends. Next in his portfolio, we see Doximity, which is a social networking platform specifically for doctors and healthcare workers. It makes up 0.36% of his portfolio, valued at $83.1 million. No dividends, and this investment's value went up by $14 million, and the reason for that is that he added another 14% to this investment. We can see it is a fairly new investment. He bought his first shares in Q4 2024 for around $53, and the price is slowly going up all the time. At the end of Q2 2025, it was $61, and he is adding to this position all the time. So it seems that he really believes that the value of this company is much higher even at the current price, not to mention the price when he started to buy. And this company is not paying any dividends at the moment. Next position is Vertiv Holdings. It makes cooling and power systems for data centers and computer facilities. Now, this investment makes 0.4% of his portfolio, and its value currently is $93 million. We can see some small dividends of $27,000 last quarter, and it is a brand new investment for Terry Smith. And it seems obvious what his thesis is here, that as AI is expanding and it needs more and more data centers and GPUs to work and to grow, companies like this that make cooling and power systems can have a great time and can make a lot of money. Okay, next up we have Choice Hotels, which owns hotel brands like Comfort Inn and Quality Inn. And it also makes up 0.4% of his portfolio, valued at $93 million. He received a dividend of $210,000, and the value of this investment went down by $4.3 million, even though he was holding this position. He didn't sell any shares, but the price went down. Now, he bought his first shares in Q1 2024 for around $126. At the end of Q2 2025, the price is basically the same. So he's just holding this position, and so far it is a stagnant investment. But he is receiving some decent dividends every quarter. Okay, next we have Paycom software, which makes HR software for managing employees, payroll, and benefits. Here we have it. It makes up 0.42% of the portfolio. It is valued at $95.6 million. He received $155,000 in dividends last quarter, and the value of this investment went up by $5.3 million. He didn't buy or sell any shares of this investment last quarter. And this is an older investment. He bought his first shares in Q4 2018 for around $122. We can see that even when the price was really high at $495, he didn't sell. But when the price fell down to around $346 and even lower, $280, that is when he added a lot of shares. Then the price came up again and he sold almost half of his investment. So during those 3 quarters between Q1 2022 and Q3 2022, he probably made some decent money. Then the price began to fall, and in Q1 2024, when it was just under $200, he made this investment really meaningful. He waited a whole year. The price didn't really change. It was $205, and then he added even more. Now, the price is slowly going up, as we can see, but what is important here is that we can see that he is all the time making corrections to his positions. Sometimes they are small, sometimes they are meaningful. It all depends on the stock price. So he follows the company, he understands it, he has his idea about its value, what it's worth, what cash it can produce in the future, and he uses the market to his advantage. So this is a very, very interesting approach where he is very disciplined, and that stock market is not telling him what to do. He can be a contrarian, and he doesn't have any problems with that. Also, we can see that since Q2 2023, he is receiving some decent dividends. Next, we have MSCI, which creates stock market indexes and investment research tools. So here we have it, 0.42% of the portfolio. It is valued at $96 million. And last quarter, he received almost $300,000 in dividends. We can see that the value change of this position last quarter was $1.8 million. He is holding this position, so this change is due to the change in price of the stock. This is another long-term investment for him. He bought his first shares in Q4 2018 for around $147. He kept on adding to this position all the way through, well, basically 2 years or a year and a half. And since then, he is just holding the shares. Now, in Q4 2023, the price was around $565, and that's when he started to sell this stock. He trimmed it really in a meaningful way next quarter in Q1 2024, and now he's just holding it again, but it is a smaller investment. We can see that through the years he is receiving some nice dividends that are growing over time. He was getting around $300,000 when he held 207,000 shares. Now he's holding 166,000 shares, and he's also receiving the same amount through dividends. So the dividend amount per share is growing all the time through the years. So it is another very nice, very good investment where he got some of his cash back by selling a number of shares and also by getting dividends. Okay, next we have Qualys, which makes cybersecurity software. It makes up 0.45% of the portfolio, valued at $102 million. No dividends, and he didn't make any changes to this position, but the value of this investment went up by $12.1 million. He bought his first shares in Q2 2020 for around $104, and he was adding to this position all the way to Q1 2021, and the price didn't move almost at all. It was still $104. Then when the price went up a bit to around 137, he trimmed this position, and then again when it was at $139, he trimmed it again in Q3 2022. We can see that he is holding the shares, but when the price goes up, as it did, for example, in Q4 2023 to $196, he is trimming this position. Now the price is a bit down, so he added to his investment in Qualys. So we can see he didn't receive any dividends through the years. Is it a great investment? Well, probably nothing spectacular, but he definitely made some money by selling in 2022, but also by holding the shares. The price is going up, not in a spectacular way, but he is making money out of it. Okay, next we have Oddity Tech Limited, which uses AI to create and sell beauty products online. It makes up 0.46% of the portfolio, valued at $106.9 million. No dividends, and the value went up by $37 million, even though Terry Smith sold 12.3% of this investment last quarter. So we can see that it is a great investment for Terry Smith. He bought his first shares in Q3 2023 for around $28. Then the price jumped up to $46, but he kept on adding to this position. And now, at the end of Q2 2025, the price was at $75 and he started to sell. So this is a great example of taking some of his money back while still staying invested in a company, because he sold over 12% of his position, and at the same time the value of the shares that are left is going up substantially. And as we can see, no dividends through the years. Okay, next we have Intuit, which makes TurboTax, QuickBooks, and other financial software. This company makes up 1.26% of his portfolio, is valued at $290 million. He received dividends of $383,000, and the value of this investment went up by $178 million. And the reason for that is, on one side, that the price is going up, but mainly the fact that he doubled this position last quarter. He had around 181,000 shares in Q1 2025 when he started this investment, and in Q2 2025 he had 368,000 shares. So the price is going up, the number of shares is going up, and also the dividends are going up because he has more shares. So this is going to be very interesting to watch. It is a new investment, but we can see a lot of conviction here, because just in 2 quarters he made this investment over 1% of his portfolio, and he's still adding to it even though the price is going up quite rapidly. Next we have Nike, and it makes up 1.89% of his portfolio. This investment is valued at $435 million. He received very nice dividends of almost $2.5 million last quarter, and the value of his Nike investment went up by almost $46 million. And at the same time, he made a very small correction. He sold 0.1% of his investment. Now, he bought his first shares of Nike in Q1 2020 for around $82. The price went up to around $98 next quarter, but that is when he made this investment really, really big, and he kept on adding to it until the price reached around $166 in Q4 2021. Then he trimmed this position. And it was the right time to do it because the price of the stock kept on going down through around 3 quarters since then. Now, the price is fluctuating a bit, but basically staying very similar. Maybe in the long term it is actually going down a bit, and he's holding the same amount of shares, we can see that sometimes he's trimming this position a bit. So is it a great investment? Well, on one hand, he did receive nice dividends all through the years, like a lot of money, over $2.5 million in many cases. But except for this move in the end of 2021 and beginning of 2022, well, it doesn't seem like a great investment. The price is going down. Next, we have Zoetis, which makes medicines and vaccines for pets and farm animals. It makes up 1.95% of the portfolio. This investment is valued at $449 million. He received a dividend of $1.4 million last quarter, and the value of this investment went up by $30 million. And the main reason for that is that he added 13.3% to this investment. We can see that he bought his first shares of this company in Q4 2020. And the price, well, it's fluctuating a bit, but it is basically flat. But in Q1 2025, he really made this a big investment, and last quarter he added even more to this company. We can see that he is receiving some decent dividends, but it's something to really take a closer look at, because we can definitely see that even though the price is flat, he believes there is way more value in Zoetis right now, because the size of his bet is really meaningful, almost 2% of his portfolio. Such a movement from a great investor really should make us think, should trigger us to analyze such a company and try to figure out what he sees in it, and do we agree with him or not. Okay, next company in his US portfolio is Texas Instruments, and it makes computer chips used in electronics and machinery. 2.45% of the portfolio. Investment value is $564 million. He received a nice dividend of almost $3.7 million last quarter, and the value of this investment went up by almost $75 million, even though he trimmed this position by 0.2%. So again, another situation in which the price is going up so much that he is selling a bit, but still investment as a whole is worth more. In this case, it's a small correction of 0.2%, but the price difference is really meaningful. It's almost $75 million for Terry Smith. So he bought his first shares in Q1 2024 for around $174. And he added a bit next quarter, but then in Q1 2025, he really made this investment much bigger. He added around 30, maybe 40% to this investment. Now, the price is not really changing that much. He is receiving really nice dividends every quarter. So at least for now, it seems like a dividend play. Of course, we can see that last quarter, the price actually reached $207. So he is up. But the overall trend is not really that appealing. We will see what will happen. It definitely looks like an interesting investment. And again, we can see that on one hand, he is holding a company, believing in it. When the price goes down, he adds a bit. But what is really interesting is that in many cases, these are companies that also pay really nice dividends. So it is like an insurance for him. So the price can stay flat if I get the dividends. Now, if it goes up, great, that's what I'm looking for. But if it stays flat, I'm okay, I still make some money. Okay, next we have Otis Worldwide Corporation, which makes, installs and fixes elevators and escalators. 2.5% of his portfolio, valued at $576 million. He received $2.4 million in dividends last quarter, and the value of this investment went down by $29 million. Now, he sold 0.8% of this position, but also we can see that the price went down a bit. So he bought his first shares in Q3 2022 for around $63, and he basically was holding this investment, making some small changes along the way, like he is doing right now at the end of Q2 2025. But the price in this case is actually going up quite nicely. So he bought it for $63, and at the end of Q2 2025, the price was almost at $100. And also, all the way through, he is receiving nice dividends, over $2 million in many quarters. Okay, so another nice, not incredible, but really solid investment from Terry Smith. Then we have Church & Dwight, which makes household products like Arm & Hammer baking soda and OxyClean. It makes up 2.85% of the portfolio. It is valued at $655 million. He received another dividend of over $2 million, and the value of this investment went down by almost $100 million. Now, he made a small change. He trimmed this position by 0.3%, but we can see a really steep decline of the stock price in Q2 2025. So he bought his first shares in Q4 2020 for around $90, and he was adding to this position until the price reached over $102. Then he sold a meaningful amount, locking in some gains. And since then, well, we can see here again the same situation. The price goes over $100 and he sells a bit. Other than that, he's just holding this position, making some small changes like he did last quarter. And the price, well, it was going up nicely, except for last quarter when it fell down a bit. So it is basically flat. But again, we can see that all the way through he's receiving really nice dividends, around $2 million a quarter. Next, we have Mettler Toledo International, which makes precision scales and measuring equipment for labs and factories. And this company makes up 3.01% of the portfolio. It is valued at $693 million, no dividends in this case, and the value of this investment went down by $4.5 million. He trimmed it just a little bit, 0.1% of the position, and the price also here we can see went down very slightly. So he bought his first shares in Q1 2022 for around $1,373. And since then we can see the price is fluctuating up and down a lot, but all in all it is rather flat, not a lot of changes, and also in this case no dividends. So he is holding this stock, and probably he believes there is more value in it, but so far it is not really going his way when it comes to this company. Then we have Procter & Gamble, which makes everyday household products like Pampers, Gillette, or Oral-B. And it makes up 3.16% of his US portfolio. It is valued at $728 million. He received a really nice dividend of $4.8 million last quarter, and the value of this investment went down by almost $59 million. And on one hand, we can see that he sold 1% of this position, but also we can see that the price went down. So this investment has an interesting history because it started in Q4 2020 when the price was around $139, but it was a fairly small investment until Q1 2023 when the price was at around 148, and in Q2 2023 he really made this investment a big meaningful position of his portfolio. Now we can see that since that time when he really invested a lot of money into this, the stock is up a bit, so he's in the green, but also he is receiving really nice dividends along the way. So it is another example of a company that has a stock price that is, well, going okay, nothing special, but that pays so much dividends that it just makes sense for Terry Smith to put over 3% of his portfolio into it. Then we have Fortinet, which makes cybersecurity equipment like firewalls to protect computer networks. And it makes up 3.87% of the portfolio. Its value is just under $890 million. No dividends in this case, and the value of this investment went up by $69.5 million, even though he sold 1.2% of his position. So we can see here that he bought his first shares in Q3 2020 for a price just over $20. He made this investment much bigger when the price was just under $30. And since then, well, he was holding the shares, he was selling them when the price was higher, like around $71 in Q4 2021, but he was basically holding it. Then in Q3 2023 and the whole 4 quarters later, he started to add to this position a lot. And we can see this was a really good move. The price was at around $60. And right now the price is well over $100. So that was a really good investment. Okay, and now we get to the 10 biggest positions in his US stock portfolio. The 10th position is Marriott. It owns and operates hotel chains like Marriott, Sheraton, and Ritz-Carlton. It makes up 5.03% of his portfolio, is valued at $1.1 billion. He received $2.8 million in dividends, and the value of this investment went up by $144 million, even though he sold 0.4% of his investment. Now, again, here we can see that he started small in Q1 2023 when the price was at around $166. And he just added a bit to this position next quarter, and then he really made this investment a big portion of his portfolio. But by then the price was at around $196. So again, he can see value even if he didn't see it before. If he believed that it could be a small investment at $160, to actually say, well, this could be a huge investment, even though the price right now is at almost $200, that takes character. And we can see that since then he's basically holding the shares. And it is a nice investment for him because at the end of Q2 2025, the price is around $273. And also here we can see nice dividends following the growth of the stock price as well. Okay, ninth biggest position in his US portfolio is Alphabet, which is Google's parent company. It makes up 5.21% of the portfolio, is valued at almost $1.2 billion. He received rather small dividend of $1.4 million, and it is small because his investment is worth almost $1.2 billion. And last quarter, the value change of this position was $140 million. And he also trimmed it by 0.6%. So again, the price went up really, really significantly. We can see that he bought his first shares of Alphabet in Q4 2021 for around $140. Then he was basically trimming this position all the time. We can see that he never bought any extra shares since then. Right now, he is well in the green. We can see that at the end of Q2 2025, the price was over $176. So he made some nice money here, and also he just started to receive dividends from Alphabet. Then we have Waters Corporation, which makes scientific instruments for testing and analyzing chemicals in labs. So it makes up 5.47% of his portfolio, is valued at $1.2 billion, no dividends, and the value of this investment went down by $72 million last quarter. He trimmed it by 0.1%. Now we can see that he bought his first shares in Q2 2018 for around $193. And through the years, we can see some changes here in Q1, Q2 2020 when he sold a lot of shares, but the price was rather low, so he added again. Then when the price was at the all-time high in Q4 2021, he trimmed this position substantially. But since then, he is basically holding the shares. We can see that the price is fluctuating quite a lot, going up and down all the time, but he is just holding the shares, making really, really small corrections to this position, and he's not receiving any dividends. So he's just holding the shares, waiting for something to happen that will make him sell some of the shares or buy some more. Then we have Automatic Data Processing, which handles payroll and HR services for other companies. It makes up 5.84% of his portfolio. It is valued at $1.3 billion, and he received a really nice dividend of $6.7 million last quarter. The value change of this investment is minus $33 million. But the reason for that is that he sold 3.4% of this position, and the price actually went up. So he bought his first shares in Q2 2018 for around $134. We can see that he was adding to it a bit, especially when the price was a bit down in Q3 2020, for example. And then when the price went up to 246, he trimmed this position. So he again locked some of his gains. That's the theme we can see here, that when he is up substantially, close to doubling his money, maybe a bit less, then he likes to sell around 20% just to lock in some of the gains. Then the price was basically doing nothing for over 2 years, and then when it started to climb in Q3 2024, he started to sell the stock. So again, he's locking in a lot of gains, but at the same time, he's still keeping a meaningful portion of his initial investment. And we can see that he was also collecting dividends all the way through, and those dividends are really, really meaningful. We can see $6, $7, or even $8 million per quarter. So his next position in this portfolio is Visa, and of course this company runs a payment network. It makes up 5.95% of Terry Smith's portfolio, is valued at $1.3 billion. He received $2.2 million in dividends last quarter, and the value change in this case is minus $81 million. Now, the reason for that is the fact that he sold 6.8% of his investment. So we can see that he bought his first shares of Visa in Q2 2018 for around $132. During the years, he was slowly adding to this position. Then in Q4 2021, we can see that he sold a meaningful amount of shares, and he was up probably quite nicely since his initial investment, $130. Then the price was probably closer to $240. Then we can see that he is just holding the shares, and a similar story as well here, because the stock starts to go up in Q3 2024, and Terry Smith is selling his shares. So again, great returns, and also here growing dividends all the way through. Now we get to the final 5 stocks of this US stock portfolio. At number 5, we have IDEX Laboratories, which makes tests and equipments for veterinarians and animal health. It makes up 6.15% of the portfolio, is valued at $1.4 billion. No dividends here, and last quarter the value of this investment went up by an astonishing $303 million. And at the same time, he was selling it very slightly, 0.3% of his investment. So this is another great investment from Terry Smith. He bought his first shares in Q2 2018 for $217, and he was holding it, making some small corrections along the way. And then when the price was all the way up to almost $600, he sold a meaningful portion of his investment. Then again, when the price was close to $500, he sold another portion of this investment. And now he is just basically holding it. But the price at the end of Q2 2025 was $536. So a really beautiful investment for him. And again, we can see that he is not just holding the shares all the time. When he sees an opportunity, he trims his position. He locks in the gains and tries to invest them in other opportunities. Okay, so at number 4, we have Philip Morris International, which makes and sells cigarettes and nicotine products. Philip Morris International makes up 7.18% of his portfolio. This investment is valued currently at $1.6 billion. He received really nice dividends of $12.2 million last quarter, and the value of this investment went down by $62.5 million. Now, the price actually went up a lot, but he sold 16% of this position. So again, when we look at those last 4 quarters, we can see that he stays true to his investment philosophy. When the stock is overvalued, he starts to trim it. So he is not just holding the shares, he is trying to actively use the the market and the extremes of the stock price to his advantage. So we can see that he bought his first shares of Philip Morris in Q2 2018 for around $80. And he was adding to this position a lot during the years. Again, Q4 2021, that's the time when he sold a lot of shares for $95. So decent gain, but nothing special, especially if we look that it took him almost 4 years. But he is still holding a lot of shares. And now when the price is really going up, getting close to $200, at the end of Q2 2025, it was $182. He is selling a lot of his shares. And also through the years, really great dividends. There was even one quarter in Q4 2021 when he received over $25.5 million as dividends. Next, we have Stryker Corporation, which makes medical devices like surgical tools and artificial joints. It makes up 8.04% of his portfolio, valued at $1.8 billion. He received almost $4 million in dividends, and the value of this investment went down by $36 million. And the reason for that is that he sold 7.7% of his investment. Now, also here we see that he invested in this company in Q2 2018 for around $168, and that he was adding to this position through the years. Again, Q4 2021, that's the time when he sold a lot of shares. It is very possible that it was a time when he needed cash, either for a different investment or some of his investors just wanted to get the cash out and he needed to sell a lot of stocks. So here we can see that he is holding this company, and for the last 2 years, the stock is really going up. So from the initial price of $168 in Q2 2025, the price is almost at $400. So a very nice investment, especially if we consider that he also got a lot of dividends along the way. Okay, and the second biggest position in Terry Smith's US stock portfolio is Microsoft. It makes up 10.68% of his portfolio, valued at just under $2.5 billion. He received $4.1 million in dividends last quarter, and the value of this investment went up by $442 million last quarter. So a very impressive result, especially when we look at this. At the same time, he sold 8% of his position. So just looking at this graph, we can see that the price of Microsoft just skyrocketed in Q2 2025. So this investment started in Q2 2018. He bought those shares for around $98, and he was holding those shares. The price was steadily going up, and in Q4 2021, again, when the price was around $336, he sold a meaningful amount, and it was actually a great time because, as we can see, the price dipped for over a year. And since then, he is slowly selling Microsoft every quarter, even though the price is going up very nicely. So it still is over 10% of his portfolio, even though he's selling it all the time. And in this case, it is possible that he just wants to keep Microsoft at this level of his portfolio. So he is just locking in great gains, and at the same time, he's staying diversified in such a way that he and his investors feel secure. Also, we can see nice dividends all through the years. And his biggest position in the US portfolio is Meta Platforms, that owns Facebook, Instagram, and WhatsApp. It makes up 11.44% of his portfolio, valued at $2.6 billion. He received a very modest dividend of $1.8 million, and the value change of this investment is also incredible, $395 million, while he sold 8.1% of this position. So that is actually a very similar story to Microsoft. We can see that he bought the shares in Q2 2018 for $194, and well, the price didn't do much. It went up a bit till Q4 2021 when he sold a lot of shares. But then, nothing special, going down, being actually in the red after many years. But he didn't sell, he actually bought more shares. And then the price starts to climb up again. And when the price goes up, the number of shares goes down. And also here, he's trying to keep this position around 11% of his portfolio, which is pretty tough because, as we can see, the price just skyrocketed recently. And some small dividends in the last year and a half from this investment. And Terry Smith quite often talks about three things that are needed to achieve success in investing. It is 1, buying good companies. 2, don't overpay. And 3, do nothing. He seems true to all of them. There are many great companies in this portfolio. Not all of them are household names, but many of them are crucial to their sectors. When it comes to the second point, don't overpay, in most cases, he's trying to take advantage of a falling price. He's a contrarian and does not seem to have a problem with moving against the market. And finally, doing nothing. So basically having a long-term investment strategy. We not only see a lot of investments that he's holding for many years, but also in a number of cases, the changes in the amount of shares are gradual. He's not such a master of doing nothing as Guy Spear, for example. He makes frequent small corrections to his positions, but he's not jumping in and out of positions. If you found this video interesting, please consider becoming a Patreon and getting access to many tools that will simplify your investment process. The link is in the description. Thanks for watching and see you in the next one.